Hey everyone, welcome to the September edition of the Exit Commentary. As you know, I focus on M&As and secondaries, and today's first segment is the handful of mergers and acquisitions which happened and were reported through the month of August. As most of you know, these take inordinate amount of time for them to go from an idea and a first conversation and a term sheet to finally getting an M&A done. It's not simple enough. But we essentially wait till the public disclosure of these M&As and then bring a little bit more color to what we're actually seeing in these M&As. So today we are going to talk about Arcana, which was acquired by Avail, Teleport, which was acquired by StampMyVisa, Fyle, which a lot of you might be using, a venture-backed company which got acquired by the Sage Group, and actually one of our own, Rio Money, where we had a founders fund investment and got acquired by Zaggle. This name might sound familiar for some of you who've been listening to this monthly commentary, because Zaggle's been very acquisitive and recently acquired yet another company in the market. So, and then we're going to just touch upon two not necessarily venture-backed M&As, Wipro and Infosys, the old daddies of IT services, actually making moves in buying adjacencies in their market of Harman and a part of Harman called DTS and Versant Group, which was actually owned by the Telstra guys. So you can see that strategics are shedding non-core businesses, and IT majors are buying into new markets and new adjacencies. So Arcana acquired by Avail. So let's kick off today with that acquisition. Undisclosed on the price. Basically, it talks about a team and IP acquisition and an on-chain token swap. So this is as exotic as they come, right? So there's not necessarily even classic stock here, but token stock. So Arcana has supposedly a chain abstraction SDK. It has developer tooling, and of course they'll have an underlying product team. And Avail sees it as the ability to accelerate their product chain and basically shorten their time for their modular stack by taking in the Arcana piece into their business. So this is classic Web3 infra for folks who dig Web3 and crypto and blockchain infrastructure, and you can see that protocol teams, developer toolkits, they're all being centralized into a larger modular stack, run by the bigger players, someone like an Avail. And since we don't know the price, we really don't know what the true end state value will be. But we thought it was pretty fascinating, given that we don't see these kind of acquisitions very often in this part of the world. And so we thought we'll bring it to your attention. There are, there are other parallels in Web3 infra consolidation. There's a similar thing. A company called Consensus got bought by Infura in 2019. Alchemy, Beware Labs 2024. So if you are tracking that space, this is an interesting trend line that you're going to continue seeing in Web3 infrastructure consolidation. So that's our first one. Let's go to the second company called Teleport, bought by StampMyVisa. Again, not too much public disclosure. Press reports indicate like an acquisition, cash, stock, but no terms disclosed. And StampMyVisa was last valued. It was a very small valuation. 2023, the last valuation seems to be like 5 million. So I'm guessing this is more like an acqui-hire, and probably getting some capital to continue supporting their growth post-deal. And StampMyVisa is actually a B2B visa processing, compliance, operations engine. And Teleport has a consumer-facing travel UX and product engineering team. And basically, I think you're basically seeing a consolidation of a broader digital visa plus travel service offering, both across India and Southeast Asia. Idea is obviously to get faster time to market. It consolidates this travel tech value chain. We've seen a bunch of companies be invested into by even the mainline VCs in India in this space. It's what my colleague Sajid Pai calls schlep businesses, like terrible archaic processes which bore everybody on all sides. But there is so much that digitization and AI can do, and it's inevitable that these businesses will get aggregated. And I think basically the teleport, front end UX will probably get absorbed and integrated into StampMyVisa's backend workflows, and they'll be able to cross-sell across the enterprise customers and leverage some of the scale. No easy paddles, but travel tech has always seen consolidation, right? Like the mega story from 7-8 years ago was Make My Trip by Bebo, which created a giant in the Indian context of two big players coming together. Flipkart bought ClearTrip to try and see whether they can cater to their customer base. And travel tech, I think, will continue to see that kind of consolidation. I think Ease My Trip bought a bunch of businesses, including a competitor to our business, Intercity. And fun fact and reveal, some exciting podcasts coming from us on the Make My Trip journey in a month or so. So watch out for it whenever it comes. It's a phenomenal story built over a quarter century now. That's what they achieved this year, the quarter century milestone. So this is in travel tech. As I said, exciting space, always consolidation oriented because it's a scale game, it's an economies game. And a lot of talk about how AI first products and tools are coming, and inevitably the big boys will look for the best tech and buy these down the line as well. Similarly, software, there'll always be, if I might have mentioned this in the past, but almost all of Blume's B2B M&A, our exits, have come from cross-border acquisitions, and almost all of them between $10 and $50 million. And so it's inevitable that you see companies grow to a certain scale, and unless the founder and the investors and the market allow for them to look like billion-dollar valuation, $100 million revenue, there's a very interesting acquisition opportunity. And so it's not surprising that we keep seeing these kind of smaller software acquisitions every month. This one was Fyle, Fyle. I don't know how many listeners are customers of Fyle. Coincidentally, we were. Blume used Fyle. So all our expense reports of my colleagues and myself used to get filed on Fyle. And they were fairly effective, grew sort of organically by word of mouth. And very happy to see a giant player like Sage buy them, announce the acquisition publicly. And so you get an expense capture and policy engine now into Sage's accounting and ERP stack for SMBs, which is essentially the same target market that both of them are offering. And Sage clearly had a gap, I'm guessing, in their portfolio, especially and definitely in India. And we've seen this happen before when Mercer bought Mettl. Mettl was one of our Fund 1 companies. It's predominantly an Indian company in terms of its customer base. But Mercer took them global because Mercer has a global base. So you can buy actually cool tech that, works in India in the SMB market and then start shaping it for other global markets and then push it out to a much, much larger base and get phenomenal sort of upside value from scaling that. And from what I last spoke to Siddharth, who took over as the CEO of Mettl, within 4 years, I think he had grown under Mercer to like 6 times the scale that Mettl achieved on its own. So that's what could happen here. Good luck to the Fyle team. And the last round they had done was, I think, $15 million at like a 70-ish million. We don't have numbers, even as recently as 24. But the acquisition seems to be a happy ending for everyone, strategic, capability-led, rather than a large cash consideration. And Sage, as I said, has history. And my colleagues have dug up, similar acquisitions that Sage has made, Auto Entry 2019, Lockstep 2022. And so that's kind of what they're trying to achieve out here in terms of building more value proposition for their existing customer base. So that's Sage. And finally, we hit upon Rio Money. It was founded by Ria, so I think the name comes inspired from the founder's name. And we actually, she's the ex-Navy, worked for Mr. Bansal Sachin. And she had a very interesting proposition, but clearly didn't get as much love from the VCs. And so ended up deciding to sell the business and build it under a strategic who believed in it. And that's what happens sometimes. And it's not a bad outcome because the founder continues to build on the vision, but under a strategic as opposed to a financial. So Zaggle Prepaid, which is a fairly acquisitive company from what little we have observed, acquired, I think has not finished its entire acquisition, but they announced it, and I think the regulatory filings are done. And it's a small value deal, somewhere between 20 and 30 crores for 100% stake. Some of the existing investors like us, get back a small amount of money. For us, it was just a founder's fund check, very small check. And Zaggle wants to keep expanding the range of digital financial services that they can offer, and this seems to be in that direction. Zaggle moves into a consumer credit, UPI credit adjacency, and increases the competitive pressure on incumbents and the new entrants who are coming into the co-branded UPI card sort of space, and embedded retail lending, which is what Rio was targeting. And clearly, we're seeing this repetitive pattern in Indian M&A, where the much larger companies are buying competencies through smaller companies and increasing their speed to market. So the other acquisitions, if you've forgotten them, one was Dice, I think we covered in one of our segments, and Green Edge, both were done in 2025. So broadly, we've covered today 4 acquisitions,